My name is Mike Florin. I'm the owner of Low Cost Mortgage. Today is your weekly update for March 18th, 2025. So, a few weeks ago, rates got substantially worse. Not really substantially worse. Let's just call it an eighth to a quarter or so, depending on your scenario. Now, we have systems in place that protects borrowers. And one of those systems has to do with this information that's over the left-hand side, or my left-hand side over here. And that is we're monitoring T-bill rates, inflation data, other data as it's coming out live. Well, what does that tell us? Well, on the mortgage side, we do this, and a lot of other companies do, and your mortgage lender should do the same thing, where if we start to see things happen like they did just over 2 weeks ago, where some of the data was coming out and it was showing, ooh, we're probably going to have a big negative reprice, we were able to jump in and lock a lot of loans. And any new contracts we got that weekend and that Monday, we forced them in and locked them right away. And let me show this little chart here. Let me show you what I'm talking about. And this is just the T-bill chart. So you've got one day it's fine, and then you start to see it start to move, and then it started to go up. And we were able to see that movement, register, lock loans, and take our current pipeline that was not locked and lock them right then and there before the investor outlets were able to institute a reprice. So that's kind of that valuable information side. I don't want to call it intelligence side, but I want to call it the information side, where if you're working with a good mortgage lender that actually watches these rates, watches these things, they can proactively lock and do things that actually help your buyers, which is good, actually very good. So we've got downward trending. See, rates overall, I'm going to edit this part a little bit. Rates overall have downward trended for about 2 months or so, and then they became relatively flat-ish. And when I say ish is, let me pop up another chart here, and you're going to see that rates are kind of trading within a range. I'm going to draw these two little lines on there. There you go. And this little range is where it's kind of bouncing between. You have a max, but then you have this low, and this low is slowly starting to contain itself or decrease the volatility that's happening around that. What that shows is you had some volatility, rates went up, they've kind of hit their theoretical max, at least for now, trading within that range is that max. They're going to tighten up, and then from there, you most likely are going to see a trend again, up or down. Usually this time of year, rates trend up. We've got a lot of changes that are happening in the government, and some instability and some stability and some perceived future goodness and some perceived future badness. If you ask 2 different people, you're going to get 2 different answers. If you ask 100, you're going to get 100 different answers. All that matters to us on the lending side, you on the real estate side, is we need to make do with what we have. And if rates end up downward trending, great. We're going to ride that as it goes. If it ends up upward trending, great. We're going to end up doing the same thing. That's why we do what we do on our end, just keeping costs low. And I know that was kind of a vague statement, but I mean, by keeping our costs low and passing that savings on to buyers, they save a lot of money. And so when rates are high, we sell a lot of loans. When rates are low, we sell a lot of loans. So regardless, we sell a lot of loans. With that being said, our February, this last month, was one of our best months we've had. It's very close to, 2 Februaries ago? No, last February, which was, I think, the second best month that we've had. I think this might have been the 3rd best month we've had as a company. So Februaries are usually really good for us. Most mortgage lenders, it's not. And I'm not sure why, other than maybe they're just more expensive, or maybe they've decided they're going to take a break on December and January because there's no sales. And if there's no sales, then why try to make sales? In all reality, there's plenty. That brings me to my last point of this video. One of the things that I teach, and I've taught sales to call centers and different things. People used to pay me to go out to their call center and teach their sales reps how to sell, how to engage with the client over the phone, et cetera, et cetera. And one thing from doing that and a bunch of other things, everywhere I've been, I've always been a top producer, sale person, right? But I don't consider myself the best sales guy out there. But in all reality, one of the key concepts of do you do good and bad in a time or bad in a time really boils down to this. Perception is reality. And reality is what you deem it to be. The perception that you have on what's going on, whether it be rates going up or rates coming down, that's all you. And if you allow it to affect you on a level where it disables you from being able to produce and work, guess what? You're going to produce nothing. And I think that's where a lot of people on the real estate side and the lending side. And the reason I say that is the worst month for rates ever. I'm going to pop a picture up here. All right, see this? This is a car. Well, the story behind the car is really simple. I was dealing with realtors and loan officers at the time, and everybody, and this was 2 Octobers ago, so this is October of 23, and the realtors that were there and the loan officers that were there were saying, we can't sell anything, the rates are too high, there's no demand. And I was like, look guys, I can go out and make enough money in sales commissions as a loan officer in 1 month to pay cash for a Corvette, and every single person I talked to said there's no way you can do that. Can't do it. Well, October starts, October ends, and at the end of that month, guess what happened? I flew one of my processors out to go pick up the Corvette. The whole point is if you let the environment around you dictate exactly how you're going to behave, and you let it affect you emotionally instead of looking at it from a logical perspective, a productive perspective of, okay, this now changed. How do I adapt to that so I can go and make more sales, make more money? Until you do that, yes, you are going to see those fluctuations. Your sales are going to go down when times are quote unquote bad, which they do for everybody, but they don't stop. And I've seen realtors where they haven't sold anything in 6 months, 8 months, a year. And yet we have realtors in our system that are brand new to the industry and they're just tearing it up. They're like, this is the greatest thing. I've got, 9 closings in 2 months as a realtor that's pretty much brand new. And you got to look at that for a minute. Is that new person know more? Probably not. But is that new person not jaded yet from other people or other things or maybe personal experiences or whatnot stopping them from doing anything? No, they don't have any of those experiences. So they come in, they start selling, they make a lot of money. Interesting how that works. So even in a good market, bad market, when you're going to go out there and get it done, you're going to go out there and get it done. Us on the lending side, you on the real estate side, it's all perception. Anyways, I'm probably going to edit all of that out because that's a long rant. Well, if your clients want a really good deal on mortgages, have them give us a call. We tend to be a half to a full percentage point or so right now, cheaper than the other lenders for the same cost. I've got a few comparison videos out where I just grabbed some random LEs that we had of the competitor and an LE that we had at the time for us and just compared them. And in both of those situations, one borrower saved 10 grand, one borrower saved 11 grand. Simply by calling us and saying, this is what I got. What do you guys have? So anyways, my name is Mike Florin. If you want your clients to save a lot of money, have them give us a call. We are 5-star reviewed on Google. We're not just the cheap person who sucks. We're actually good at what we do. Yeah, Mike Florin. I'll talk to you later. Have a great day. Bye.